Well, good morning, good afternoon, and of course, good evening, traders from across the globe. Thank you so much for tuning in, as always, to my 2904th edition of Short Term Trading Live with Oscar. Welcome, welcome, traders. What have we got going on? Well, let me get to one thing first. In 1994, the internet came out in 93. During 93, I was working on it. By the beginning of 94, I had a website for trading markets. I have not been down without taking that site down to tinker with it and put it back myself since 1994. I've had many websites. Always, they're up. One leads into the next. Never a down day. Well, as you Omniacs might have known if you've been following me today, my site was down. Not our fault by any means. That was my point. It's the first time in my whole, since the internet started, that, I couldn't get to my site for some other reason than my own. But in any event, my host is migrating from physical metal servers to virtual servers, and during that migration, my site's down. Nothing I could do about that. Might take a few more hours to another day. I'm not sure. But we've got a Discord channel. We send out our recs always across the Discord channel. Just watch the OMNI Discord channel for our OMNI trading recommendations. This way you know when to get in, when to get out. Keep your eye on Discord. I'll make sure I send the signals there. All right, traders, so you're looking at the Dow Jones Mini or the Dow Jones itself. This is the stock market you're looking at. A few days ago, the stock market left a gap. The S&P left a gap. NASDAQ left a gap. Russell 2000 left a gap. Most of the stocks left a gap and just took off. That gap right there. We contended that gaps do not get left unfilled, especially in something like the S&P. The Dow, S&P, they do not leave gaps unfilled. Here is what happened since. We went and filled the gap entirely, completely filled. Done, right? Came down, you could see, let me just grab this little tool for you. You can see that it came all the way down into that gap area, filled it completely, and then started to go back up. Up, up, up. All right, completely filled the gap. So what else happened out there? And you've seen all of these charts, by the way, the night that they were supposed to fill the gap. The night before that, I presented you with all these very same charts and said, expect the gap to get filled. And I told you ES does not leave gaps unfilled. That just doesn't happen. Well, it's not. It's considered filled. Why? Because the Dow turned around and came back and filled the gap. The ES turned around after going up and leaving a gap, came all the way back down, just about filled it almost visually filled the gap right here, and then took off. Gap is considered filled. NASDAQ, same. NASDAQ did the same exact thing, if you ask me. Went down, close enough to fill the gap. The Dow renders these gaps filled. And you heard this from me the night they filled the gap. So where are we now? Let's take a look. Let's go to another chart and see what's going on out there. E-mini S&P Weekly bar traders. Before this ever happened, as you know, this is the power of technical analysis. I came out with a video and said, please be calm, do not bail out of stocks. In that video was this chart. And I said the market is going to crack likely all the way down to about this area right here, where I've got my big gun averages, and Wall Street usually comes in to look for the support. Wall Street support is coming. Do not bail out of stocks. The market, what's it do? It drops straight down to that area, stops cold in the area. Now, here's what's interesting. I gave these targets before we ever drop. The market, if it starts to drop, will get between 49.75 and 47.75. What did it do? It dropped down to 48.32. Are you kidding me? 48.32. What we expected, right in between these two. What did it do after that? It rallied up to 55.28, a 696-point rally. Then we had the holiday week, right? Let me blow this up for you a little bit. And we had the holiday week. And of course, the holiday reversals, if you believe in Oscarisms, if you're an Omniac, holiday reversals took us down for just a few days. And since then, we are currently strong as can be right now. We're here. Now we're up, get this, about this many. 796 points. We're up about that many points now as of this moment. We're higher than that first rally out of the hole. We had the holiday week, came back down a little. Here we are currently. That is higher than we were when we made the 600-point rally. It's now a 796-point rally. So, let me show you a little further how well analysis works. Now, I will admit, I've gotten replies to videos and comments on videos, and the ones that get me the most are the ones who write things to me like this. Oscar, you don't know how to call charts. You don't know how to read charts. I know, K-N-O-W, I know the market's going down is what these people tell me. And I think to myself, dear Lord, the fact that he's got enough time to write to me that he knows the market's going down, but he's not outside mortgaging the house, selling the car, and doing everything he can to get short the market. He's got time to write to me and tell me how wrong I'm going to be because I read the chart, and how right he's going to be because he knows where it's going to go. Get that. These are the type of people that write. They know where it's going to go. Yet, they don't bet the farm on that knowledge. Well, I give you guys great analysis. If I knew just one day, K-N-E-W, if I knew for sure just one day where these markets were going to close, I'd boot my wife and kids out of this house. I'd have it mortgaged today. I would get my car's mortgaged. I'd mortgage the OMNI property. And I'd be short the market if I knew it was going to go down, for sure. So when you write something to me like, Oscar, you don't know how to read the charts. Why would you call bottom when I know it's going lower? Think about this. Get the words I know out of the sentence and think about replacing them with the chart knows where it's going to go. That's where you'll get your knowledge. Let's continue on. So you see here, I did a video saying, please stay calm, don't bail out of stocks. When we drop, we'll just drop to this spot. Don't get nervous. So we did that. Let me show you a little further what's actually happening here. Let me go to this chart. E-mini S&P. We have a green Omni. I say the bottom is still in, no matter what the lunatics write back to me about who don't know how to read charts. And here's why. You know the day I put out that video to tell you that the bottom is in and do not, well, not the bottom is in, do not bail out of stocks? That video came out on this day, the absolute low of the drop. Down, down, down we went. I came out with a video, and every night for the next week, the name of my video was, don't bail out of stocks, don't bail out of stocks, don't bail out of stocks. Here's why. Here's a YouTube video with chart reasoning why. Don't bail out of stocks. Good analysis, right? That is the strength of believing in and doing good technical analysis. So let's go over this chart. This chart shows us it started with the bear flag, right here, bear flag, led into the market dropping. Tariffs get announced here. Bear flag reaction gets stronger. Down we go. And then I come out with a video and say, listen, volatility, extreme volatility and huge daily bars accompany tops and bottoms. This looks like it could be a bottom. Don't panic out of stocks. Wall Street's going to buy it right there on the low. That's when that video came out. Believing in my analysis, as I've been showing you on YouTube for 18 straight years, how strong is this stuff? Get this. The bottom is in video came out on this day when we broke out of this triangle or wedge, if you will. I came out with a video and said the bottom is in. More pushback from people on the internet, Oscar, and I would write back to them, if the analysis changes, I'll let you know. And they'd write back, oh, look at that, your analysis changes? How weird are you? That means we can't trust you. And I'm just like, sorry, kids, please just follow the videos. Anyway, the people with the common sense, watch this. We did break out, and we're really starting to go now. Now, what would make this continue on? Well, let's go somewhere else. What would push the stock market higher? The fact that crude oil is now going past my 55 target, it's going to head back to that one, and it's going to get down to the 47 target area, 47.50. Now, if you recall, we called this the Trump trade, but we were just being cute with a silly name. We came up with technical analysis right here in this red circle. Market was about 77 to 78. We posted targets that we would drop to 55, then ultimately 47.50. The market proceeded to drop from there. Down, 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 bounced. Down, 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 hit 55.12. 55.12. What was called for 55, then ultimately 47.50. We bounced from 55.12 up a little, heading back down again. Now we head to the 47.50 target. Why would crude push the stock market up? Because cheaper or a break in the price that you're paying for energy, no matter whether it's heating your home, whether it's driving your car, driving a truck, moving a train, moving anything at all, if it needs energy, it's an automatic shot. It's like a shot in the arm or a stimulus when crude goes down. Helps every country, helps every company, helps most people unless they only have EV products, right? So it helps almost everyone around the world immediately, which will help companies, which are build the stock market, right? Stock market's made of companies, crude getting cheaper, that will help. What else might help push the market higher? Well, let's go here. This bad boy, let's go here. The bond market. Bonds are going up. When bonds go up, interest rates go down. You've got crude going down pretty quickly. You got interest rates going down. You had support come in from Wall Street 2.5 weeks ago. Looks like the bottom is in, kids. I wasn't wrong when I called it, whatever videos ago, 5 videos ago, using analysis. Now there's one more piece of this puzzle. But before we get there, did anyone notice the theme, this purple average, on just about every chart I showed you? A, it worked really well on all those charts. B, we got above it. NASDAQ, Russell, E-mini, S&P. Now bonds are above it. Unbelievable how well this average is working. So on top of everything else, there was a theme in this video that everything's getting above this average. Everything I used it on. So what else is going on? Bonds going up absolutely positively means that interest rates are going down. Crude going down, interest rates are going down, Wall Street supporting the market, and then finally we can round it off with something like this. Look at Mr. Bitcoin. We gave out a couple of targets in Bitcoin. First target 94,200, second target 99,000. We gave those targets out right here. Bitcoin so far has hit the 94.2 target, and it's on its way up to 99. It's also in a very smart Oscarism or F flag, an Oscarism known as the F flag, which usually will continue to take a market higher. And I have to change it now. It's not 99,000 target number 2. It's about 101 to 102,000, right around there. 101. Well, we got to put the extra 0. It's got to be there. I understand. It's going to be like that. I'll put the commas in now. We're over 100,000. All right, just to make it look better. It's going to be 101 to 102, target number 2. Was 99,000. We just raised it looking at tonight's analysis. Traders, I hope this helps. Please like, share, and subscribe these videos around YouTube, all over the internet. It would really help me. Leave comments below. I promise to answer them. And if you want to sit with me for 5 days and nights, here in Las Vegas, it's called OMNI BOOTCAMP. I've got 2 open seats. It's a long weekend. You're here Thursday, Friday, Saturday, Sunday, and Monday. You'd have to give me that much time. Long weekend. If you want to join me in my home office, go to OMNIBootCamp.com. OMNIBootCamp.com. Fill out an OmniCamp application. I'll call you. It's May 29th. It's starting to come upon us now. It's a month from now. If you want to join me, OmniBootCamp.com. Fill out those applications. For anyone who doesn't want to join me, be careful out there trading. Put your stops in first. And remember, stops are in. Emotions are rock and roll, traders. That is it. Stops are in, emotions are out. Put your stops in first. Join me at livewithoscar.com and have a great day trading out there.